Here we go.
I'm hearing 50 out of ECB.
50? Where are they in step?
Deposit rate, goes from 2.5 to 3. Let's get to Steve Leisman, who I think is following too. Steve?
Yeah, Carl, it is 50 across all three different benchmarks of the European Central Bank. So I will tell you this, that we went into this thing, the odds have been moving around all morning, the probabilities. We went into it with a 65% probability of a 25 based on comments that were made just before the number came out or the decision came out from the ECB vice president about concern about the banking system that suddenly led people to believe that all of a sudden the ECB might go 25, but they're projecting ahead. And I've got a few more headlines here. I'm looking at the comments here from the elevated level of uncertainty, reinforcing the importance of a data-dependent approach for the ECB, which is interesting. And they'll say it's going to be determined by an assessment of the inflation outlook in light of new data. So they're kind of taking future rate hikes, it seems to me, in these comments here and making them a little bit uncertain. Now, I want to check what's happened with U.S. markets and interest rates across the board. The 2-year, we went into this at 393, up a few basis points. It looks like to me at 397. I'll give you an actual print on that as soon as it updates here in front of me here. It looks like it's 357. We went in at 350. So anyway, up a few basis points. And it looks like futures as well, down a little bit. It seems to me we went in minus 17 at the S&P. Now we're minus 25. So the market had wanted a little bit less from the ECB. Now it's giving it a little bit more with the big question, what is the ricochet on the Federal Reserve here? And I'm going to need to look down a little bit, take a look at my Fed funds futures. And it seems to me that they are a little bit lower here. It looks like to me 382 on the year end, 486 on the peak rate here. So again, building in more Fed rate hikes. Why? Because of the idea that perhaps the ECB might do more. We've got a comment here, I think we might, from a former Boston Fed president, Eric Rosengren, who's one of two Fed officials who have been former Fed officials who have been speaking out. And Eric Rosengren decidedly saying that the Federal Reserve ought to pause. Eric was a Fed president who was very tuned into the banking system and concerns about the banking system. And what he essentially said is that the Federal Reserve ought to pause because of finance. He says financial crises create demand destruction, banks reduce credit availability, consumers hold off large purchases, businesses defer spending. Interest rates should pause until the degree of demand destruction can be evaluated. Guys, we have several days until the Fed has to make this choice here. And I think a big part of it will be determined by how much stress remains in the banking system. How can you tell that? Well, we'll get a picture of that today at 4:30 this afternoon when the Fed releases its weekly balance sheet. And we'll see how much takedown there's been, how much borrowing there's been at the Federal Reserve from small and medium-sized businesses. So tune in at 4:30, and obviously, Carl will be watching. We'll be watching all day these interest rates and how the market's reacting and the expectations for the Federal Reserve. Carl?